Welcome to the University Research Center podcast for August 2026. I'm Corey Miller, State Economist from Mississippi and Director of the University Research Center. This month's podcast summarizes the latest forecast for the U.S. and Mississippi economies. Let's get started. In this month's outlook, we've seen some modest improvement in the short-term forecast. The overall narrative in 2026 continues to remain basically the same as it has over the past few months. The tariffs and war with Iran continue to weigh on overall growth, although these headwinds are being slightly offset by provisions of the One Big Beautiful Bill Act from last year and investments in artificial intelligence. Employment is expected to be roughly flat over the next several years as the no hire, no fire type environment persists. Inflation is expected to remain elevated over the medium term, at least through next year. And of course, this will be largely determined by the changes in oil prices. Payroll employment in Mississippi rose by 3,900 jobs in July, a 0.3% increase. Compared to July of last year, employment in the state was higher by 6,900 jobs, a 0.6% increase. Overall, payroll employment in the state remains little changed from about 1 year ago. Looking at changes in employment by sector, payroll employment is up 3% since February of 2020. As of July, an increase of 35,200 jobs. The sectors that have added the most jobs over this time period are the trade, transportation, and utility sector, which has added almost half of these jobs, over half of these jobs, with 19,200, an 8.3% growth in that sector. The healthcare and social assistance sector has added 10,900 jobs over the same period, an 8% increase. And the construction sector has added 10,000 jobs since February 2020, a 22.4% increase. Several sectors remain below their February 2020 level as of July, most notably the manufacturing sector, which is 7,700 jobs below its February 2020 level, a 5.3% decrease. Although, as I have noted previously, this sector actually surpassed its February 2020 level, and for factors such as tariffs and the conflict in Iran has fallen below this level. The government sector is also considerably below its February 2020 level. As of July, it was down by 8,700 jobs, a 3.6% decrease. The accommodation and food services sector, which was hit the hardest during the pandemic, arguably, was 1% below its February 2020 level, a decrease of 1,300 jobs. Mississippi ranked firmly in the middle among all states in both payroll employment growth and establishment employment growth as of July. The 3% increase in payroll employment since February 2020 ranked 25th among all states in July, as did the 2.6% increase in residence employment growth. As seen on this slide, the state was also firmly in the middle in residence employment. Notably, the labor force in Mississippi decreased for the 8th consecutive month in July and is now up only 0.4% since February of 2020. Job openings in the U.S. decreased in July for the 2nd consecutive month, but remain higher than in most of 2025. Hires increased in July, and they remain roughly in the same range as over the past year. The U.S. labor force participation rate fell to 61.4% in July, which marked the lowest level since February 2021. The labor force participation rate in Mississippi decreased for the 4th consecutive month in July to 55%, which was the lowest rate for the state since May of 2024. Seasonally adjusted initial unemployment claims in Mississippi were about 4,100 in July and decreased for the 2nd consecutive month. Initial claims remain below the monthly average from 2019, which is a sign that widespread layoffs in the state have not occurred. The number of seasonally adjusted continued unemployment claims in Mississippi also decreased for the second consecutive month in July, and continued claims remain well below the 2019 monthly average. Initial unemployment claims in the United States were just over 200,000 on a weekly basis for the week ending August 21st, and continued to trend down as they have since late 2025 and remain below the 2019 average. Continued unemployment claims in the U.S. have also trended down since late 2025, but have increased in recent weeks. As of the week ended August 21st, the level was approximately 1.8 million continued claims, which was above the 2019 average. The real average hourly wage for private workers in Mississippi increased 1.2% in July and was 0.2% lower compared to 1 year ago. In March of 2025, the real average hourly wage for private workers in Mississippi was $21.63 an hour, and in the following 16 months, the real average hourly wage has exceeded this level only one time. The year-over-year change in the Consumer Price Index for the United States was 3.4% in July, which marked the lowest value since March. This decrease in the 12-month change in July was driven primarily by lower gasoline prices. The 12-month change in the core Consumer Price Index fell in July to 2.5%, which was its lowest level since February. Core CPI excludes the more volatile values of food and energy. However, higher gasoline prices in the past several months have likely bled over into the core CPI, so that the decrease in gas prices in July was also reflected in the value of the core CPI. In specific categories, the 12-month change in the CPI was most noticeable in gasoline at 24.6% increase over the last 12 months, which is down from the previous 2 months. Electricity costs were still somewhat elevated in July, up 4.2% over the last 12 months. The 12-month change in the price of food was 3% in July, about the same level it's been in the past couple of months. New vehicle prices over the last 12 months were up only 0.5%. Shelter prices were up about 3.2% over the last 12 months, which is a relatively low level compared to recent months. And all items were up 3.4% as noted previously, and all items less food and energy were up 2.5% over the last 12 months. Turning to monetary policy, the firm S&P Global Market Intelligence continues to predict no action will be taken by the Federal Reserve regarding interest rates in 2026, as the firm believes the next reduction in the federal funds rate target will not occur until June of next year, which will be followed by a second reduction in the rate of approximately 25 basis points in December of next year. The firm expects the target rate will reach the so-called neutral range, which neither stimulates nor restricts economic activity, of 3 to 3.25%. And the firm expects this rate will remain in this range through the end of the decade. Interest rates futures markets, however, have retreated from earlier predicted hikes following the July inflation reports. Markets set the current odds of a 25 basis point increase in the federal funds rate target before the end of this year at 37%, down considerably from earlier this year. Markets believe current Federal Reserve Chair Kevin Warsh's speech at the Jackson Hole conference this month could provide reassurances about what the Federal Reserve will do regarding inflation. Looking at the latest developments in tariffs and the assumptions that go into this month's forecast, the IEEPA tariffs have been replaced by Section 301 tariffs. This is because the Section 122 two tariffs that the White House had imposed over the past few months expired in late July. The consequence of this has not changed the overall effective tariff rate, which remains roughly 10%. According to most of the latest forecasts, tariffs are expected to reduce U.S. real gross domestic product growth by 0.4 of a percentage point in 2026. Turning to this month's forecast, S&P Global Market Intelligence estimates U.S. real gross domestic product will expand 2.1% in 2026, an increase of 0.1 of a percentage point from the previous month's forecast, and the same level the U.S. economy expanded by in 2025. U.S. real GDP is projected to expand 2.3% in 2027 and in 2028, and these forecasts are unchanged from last month. URC estimates real gross domestic product for Mississippi will increase 1.5% in 2026. This forecast is 0.2 of a percentage point higher than in July. The forecast for Mississippi real GDP growth in 2027 is an increase of 1.3%, which is also 0.2 of a percentage point higher than the forecast of the previous month. And in 2028, state real GDP is forecast to expand 1.3% as well, which marks an increase of 0.1 of a percentage point from the forecast in July. U.S. payroll employment is projected to increase 0.3% in 2026, according to the latest forecast by S&P Global, a forecast that is unchanged from the previous month. The firm also estimates U.S. employment will increase 0.3% in 2027, which represents an increase of 0.2 of a percentage point from the July forecast. S&P Global projects U.S. employment will rise 0.3% in 2028, a forecast that is unchanged from the previous month. In URC's latest forecast, payroll employment in Mississippi is projected to grow 0.2% in 2026. This estimate is 0.2 of a percentage point higher than in the previous month's forecast. In 2027, payroll employment in the state is expected to remain unchanged, an estimate that is the same as in July. URC forecasts payroll employment in Mississippi will fall 0.3% in 2028, an estimate that is 0.1 of a percentage point lower from the forecast of the previous month. The latest forecast by S&P Global projects consumer price index inflation will reach 3.2% for all of 2026, a forecast that is 0.2 of a percentage point lower compared to the previous month. The CPI is projected to increase 2.2% for all of 2027, a forecast that is also 0.2 of a percentage point lower than in July. S&P Global estimates the consumer price index will increase 2.3% in 2028, a forecast that is 0.2 of a percentage point lower than in the previous month. Summarizing this month's economic outlook, the U.S. economy is expected to grow by an average of 2.2% a year through the end of this decade, and real GDP for Mississippi is expected to grow an average of 1.3% a year through the end of this decade, and these long-term forecasts are unchanged from last month. U.S. payroll employment is expected to grow 0.3% a year through the end of the decade, which is also unchanged from last month's forecast, while Mississippi payroll employment is expected to be essentially unchanged on an annual basis through the end of this decade, a forecast that is up 0.1 of a percentage point per year from last month. There continues to be no recession in the forecast, as most forecasting firms place the risk currently in the range of 25 to 33% in the next 12 months. Inflation expectations have been lowered slightly since the last month's forecast, but inflation is expected to remain above target through at least 2028. Remember, you can subscribe to our publications and follow us on X at Mississippi URC. Thank you for watching.